All right, folks, here we go. Like 1 minute, and we're going to see what happens with the opening of the futures. Most normal people are look forward to their weekend. They're like, "Oh boy, the weekend's here! Isn't that awesome?" But us, we're like, "Oh my god, I have to wait 2 days to find out what happens." Let me switch over to the display here. So as Brent, has most eloquently said, this is a very sort of binary situation. We don't know what's going to happen, and A and B, how we open the futures right now is not the tell-all end-all of what's going on here because things can change a lot by tomorrow morning. I've heard that some other markets in the world have been negative today already, but let's wait and just see what happens right here on the open of the futures here. And down. So it looks like NASDAQ down 140, E-minis printing down 44. So far, right on the open here, we are down. We'll continue to monitor that and see where that goes from here. It's been a wild ride so far. I've been watching some of the Theo Trade videos, which is interesting. They're always very bearish, of course. But this is a scary and unique situation. I just wanted to talk for a little bit about what I remember from the 2000 area period, the pop of the internet bubble period, because I was trading during that time, and we noticed a bunch of days where it was just down every day. It wasn't down like huge like we've had here, but it was definitely down every day. Looks like now the NASDAQ down 150 and the E-minis down 42, with the Dow futures down around 400. And what happened in 2000 was just several days of just down, 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 and a lot of the liquidity dried up. A lot of traders, they're sort of the day traders, the retail people, like the kind of people you would see on StockTwits. A lot of those people just kind of threw in the towel and were like, look, I've had it. And it didn't happen quickly, but over time, standing on the trading floor, we would notice that the paper just kind of dried up. There just wasn't a lot of orders coming in. And a lot of the high volatility stocks of the time, over a period of months, the volatility came in and it kind of just sat there because the market had come way down and volatility had come way in, and there just was nobody buying or doing anything. And so it was a frustrating period of time. And for us being market makers, there was almost no way to make the money back if you'd lost money because nothing was, no orders were really coming in, it felt like. Now, of course, there was order flow. There was some paper, but it felt like not a whole lot. So, let's look at the charts for a second here. I wanted to talk about some possible things to buy. Yeah, I was very when I looked online at people at comments, it seemed like a lot of people have gotten short this market at this point. A lot of people, like in the retail world, were getting long volatility products on Friday, and were kind of selling this rally that we had in the afternoon. That was a pretty short period of time to sell it, but a lot of people online seem to be talking about staying short this market. And if we do open where we're being indicated right now, then that would turn out to be a good move. We'll have to see. Obviously, there's points in the chart here that are going to be important. Let's back it out for a second here. And you can see the devastating move last week, and really down 300 and something points on the S&P for last week was just an amazing move down. If we do back it out a little bit further, we can see that this brings us back to last year, certainly, and everything that happened in the fall as far as that big rally is just erased. And the real question for everybody is, does it hold here, or do we get another huge leg down? And we'll have to wait and see on that. Let me change this chart here again for a second and see. Um, I guess the first question to me, let me move this too so it's centered right. I guess the first question to me would be, does this low point here end up holding, that 2853 point end up holding? Because if we look here, we're kind of like in the middle of things. Now, I'm no real big chart person. But it seems to me here that we're kind of in the middle of that range that we were ping-ponging back and forth on Friday. Um, Now let's talk about the VIX because that's what this channel is about, and then I will go to the chat. We look at the VIX and the VIX 40, and that's a huge number. And the other huge thing is the futures are very far away from the VIX now. Now, it's usually a big deal that's inverted where the VIX is higher than the futures, but now the VIX is over 10 points away from the closest future, that being the front month future, and then the second month future being another 5 points away from that one. So let's go to VIX Central and take a look at that. All right, so here we have VIX Central. And, it doesn't look as dramatic on VIX Central because it sort of recenters everything. But if I can get out of the way here for a second, and I might need to kind of reframe this too because it's not showing us everything. Let's see if I can get this right here. All right, so there we can see a little bit better. So showing 12% backwardation. So that is a real number, and if the spot stays up here, that is going to pull the futures, even if volatility does not move higher, even if we don't spike from here, if we stay in this range around 40, that will drag these futures higher over time. Now, in a situation like this, every day is a long period of time, and so my short, I'm not as worried about that 11% figure right this moment because I still am short VXX, and I did add to my short Friday. The levels at which I added to it would not make my position a loser right where we are now in the futures. But once again, futures open down, E-minis down 46, Dow futures down about 400, and NASDAQ futures down 144 as we rejoin the marketplace after a break over the weekend. And showing the front month VIX future up 3 points here, second month up 170. And once again, there is a huge spread between the VIX and the VIX futures. And the products that all of us trade, we need to remember VXX, UVXY, those are based on the VIX futures. Okay, so when you're selling a UVXY or a VXX here, you're not selling a 40 in the VIX. You are kind of tangentially, but what you actually are selling is a combination of the front month future, which is currently the March future, and the April future. So you're selling a 29 in the March future and a 24.75 in the April future. So in your mind, you need to be thinking, I'm selling somewhere in between 25 and 29. If I'm selling one of these products now, I'm not selling 40. But either way, between 25 and 29 is still a pretty high number. If we look at a historical picture of the VIX here, which is the other kind of crucial chart to be looking at for a vol trader here. Now, it's hard to say what's going to happen from here. We do have two cases in the past here on our chart where it only stayed above 30 for a very brief period of time. And here we're looking at least two sessions where we're way up in the middle of the spike here. So, it seems like there is a possibility that we could stay higher up with the VIX here, and that would be kind of a unique situation. Remember, the VIX has really only been around since the late 90s, and we can extrapolate kind of what the VIX would have been before then, but that is really just extrapolation. So it's almost like we're a little bit in uncharted territory here, and that's kind of a rare thing to say with the stock market. I mean, people say it all the time, but usually they're wrong when they say that it's a new market. It's never going to sell off again, or it's never going to rally again. Usually when they say that, they're wrong, but and certainly volatility will come in and can't stay at 40 forever. However, this spike could last longer at higher volatility levels than other ones. But it's all going to depend on what the market moves are moving forward. Remember, from the market data, we can calculate a realized volatility over a specific time in the past. And if we calculate that for the last few days, it's off the charts. So we're going to have to see how much stuff moves around, what sort of daily range we have, and as far as a high point and a low point, and how much we move within that range for the general market. And I'm looking at the general market now. I'm not looking at individual issues very much. Actually, let's take a look at an individual issue here for a second. I was talking about with my father about some stuff. He was talking to his broker on Friday afternoon, talking about, thinking about what maybe they should look at to buy. And they were looking at Microsoft. And I don't like this Microsoft chart as far as something to buy, just in that it hasn't moved back down. In my opinion, Microsoft hasn't even retraced back to where it was in, I believe, in 2020 yet. So we started Microsoft 2020. It looks like 150, around 156, 160, and it traded below that on Friday, but it ended Friday above where we started the year. Contrast that with an Amazon, and also contrast that with an Amazon, for example. And it's a similar range to where it was, I suppose. But if you think about that, this major market move hasn't even it's only erased us back to the beginning of this year. It makes you think we may have longer to go. And as I sit here and talk to you, we are rallying back a little bit here, with the E-minis only down 39 now and NASDAQ down 116. So it's a lot. I think a lot of money managers is going to be some sleeplessness tonight, possibly, and we'll see what happens as we move into tomorrow morning. Let's take a look here. All right. So I don't know how you folks are positioned. On Friday, I ended up buying a VXX put spread, and I bought something. And my thinking on this is that I wanted to buy something that was going to make some decent money. So I wanted to pick some strikes that were lower than at the money right now, making a bet that we would have some sort of market recovery, or at least stabilization, be in the allotted time period. And the allotted time period for me was in the next 75 days. So I picked a put spread in VXX that's 75 days out in time. I went out to May, and I picked the 2017 put spread. And it was a situation where it was between doubling and tripling your money, which is you could say that's aggressive, but we are in a big spike right now. So to predict that this is going to move lower at some time seems like a no-brainer to me. I don't know if it's going to move. I wouldn't want to predict it was going to move lower in the next day and make a big bet on that, but I'm certainly feel comfortable with making a bet that this is going to settle at least somewhat from where it is now in the next 3 months. And so that's what I have here. It's the May 2017 put spread. So that would mean that to maximize profitability, VXX would have to be back below 17 in the next 3 months. But the trade could be profitable if we just move a little bit lower sometime soon. So, and when I put the trade on, it was I paid 110 for it. That was before the rally on the close on Friday night. So let's take a look and see where we are compared with where we were Friday afternoon, because it seems like we're kind of close to where we were Friday afternoon. So if I back this out, okay, so this shows us all of Friday and then into this evening. I'm going to try to make even more space here for us. So we are right back in that area we were before that rally on the close on Friday, right? We're right in that band there, the bottom of which was achieved right after the open on Friday morning. and then we kind of bounce back and forth in this range, and we're right back in the middle of that range right here. So it's exciting. I know I in past videos I've made the point of saying to people, look, this is a stressful time. A lot of people have lost money. If you've lost money, you're definitely not alone. I know it's going to seem, some people are going to come online and say, oh, it was obvious. I was short the whole time and I knew that this was coming and I was positioned for this. But the majority of people are not positioned for this, A. And B, remember, the majority of people who have any action in the stock market are long the market in one way, shape, or form or another. Either people have a 401k with their business and they don't follow the stock market at all, or the people that are following this this channel, a lot of them are more sophisticated traders who are not just buy and hold 'em traders, but majority of people in the world are kind of buy and hold type people and have gotten hurt a lot in the last week. And I one of my side gigs is working at an expensive resort, and I was kind of quizzing people all of last week, and most people were just saying, like, I just don't want to look at it. Don't even look at it. The market will come back. People don't seem super, super shaken, and the wealthy people I talk to seemed like they're just kind of ride this out. So that's kind of where we are. I don't want to waste too much of your evening, but I guess we're just going to have to I got bad news for you. You're going to have to wait till tomorrow morning to see how this shakes out. The positive news for me is that we're not down huge. Sometimes it can be better to start down and rally from there. But currently showing the Dow futures down about 224, Nasdaq down 72, and E-minis down 24. So we've come back a little bit from where we opened here. Let's go to a shot of the action just today, and we can see a little bit. We opened a space, and we're kind of rallying back from there. Now anything can of course change overnight. Let's see. Bought some puts on UVXY, the $19 puts by 320. So I guess you bought the 19 strike puts is what you mean. Let's take a look at the volatility of the options in UVXY really quickly, because option prices in UVXY are very high, as in VXX right now. Let me make sure that okay. So if you look at the right of the screen, you can see the different months, what the prices are. And options on the VIX are very high as well. As you can see, the VVIX up around 125. But these prices are very high. And so if you're going to buy a straight option, a straight call, or a straight put, I would look for something to sell against it, because you want to do what you can to reduce your cost basis. So if we look out to the March 20 expiration, and we look at something like the 19 strike put, my sheets, which are not always accurate, but it's showing an 182 volatility. And if we look at it, but when I'm looking at an option like this in the middle of a spike, one thing I'm going to look at is, just in my mind's eye, does it make sense to me to pay? And let's call this a $2 option. The market right here is 180 bid at 236. Does it make sense to pay $2 for an option with 20 days to go? So the break-even point for this on expiration, if we paid $2 for it, would be 17. It's pretty easy math, right? You pay $2 for the 19 strike, so break even 17. But that doesn't mean you can't make money on it without it going to 17, without this going all the way to 17. Certainly, any down move that we get, you could get quickly out of this option and make some money on it, possibly. But I would be extremely careful about buying this sort of option, because what's going to happen is, as soon as we get an up day, they're going to slaughter the volatility. And this 237 number, is going to go down by like 80 points in one day. So this seems very high, this premium level. with 19 days to go. So I'd be very careful, Trader OT, about how long you want to hold on to that, because what I would hate for you is to be right and be short these products, and you're right and they go down, but you don't make as much money as I'd want you to. I had a similar trade on actually in the same series. Um, let's see where it is. Actually, but it was in VXX. Let's just switch over there. I had a very similar trade to you on a couple days ago where I did buy the VXX March 20 put. Let's see. I bought the VXX March 20 put and I paid $1 for it. And at the time, I felt like I paid $1.70 for the 20 put. And at the time, I felt like we were like moving quickly lower, and that I would be able to do something against this. For this March 20 put, I paid $1.75 for them, and I felt at the time that I could quickly be able to do something against that. And it gave me a lot of short deltas for a couple puts. It gave me a lot of short deltas. So, but the problem, the thing is that this is like a hot potato. Any premium that you own in this environment is a hot potato. It doesn't matter if it's calls, puts, if it's in a volatility product, or if it's in a stock. At this point, last week owning premium was a great thing to do. Last week owning premium made you money, especially in the SPX, that sort of thing. But as time goes by here, they've cranked option prices up to the point where option prices are very expensive, and it's a hot potato. You want to get out of your hands as quickly as possible. If you can use owning some premium to make you some money, that's great, but you just want to monitor it and get it out of your hands as fast as possible. And what I would suggest looking at is maybe some spreads, some spreads where you're buying one option and selling another, because in that way you take out of the equation the volatility, because the option that you're buying and the option that you're selling could be both high or both low. It doesn't matter, because they both kind of cancel each other out in a way. Let's see what we got in the chat. What do you think about the Jan 21 12 puts? Instead of the 7, yeah. So let's look at VXX out in Jan. I mean, I really like some of these spreads. You can put a spread on way up here where you could potentially like triple your money. But the thing is like how aggressive do you get? So if we do look at out in Jan, and if you're doing a trade out in Jan, it's the kind of thing that you want to commit to. And by that I mean you want to put the trade on. You really do want to leave it for like a couple months, regardless of what happens, and that can be very hard to do in this environment. So the reason I'm not trading any of this way far out stuff right now is that I know I'm going to want to mess with it in a couple days. So, but yeah, the Jan 12 puts, the 7 puts. The reason why I like the 7 puts way back when I was doing those is because they were so dollar cheap that there was a chance that they could double, triple, quadruple, right? The 12 puts, they could certainly double, but there's maybe some spreads that I like better. Or if you want to get really aggressive, you could just go look on the board for whatever options you can find that are like around 25 cents and see if it's even reasonable to look at them. But if we take more risk and we move forward to say like April with 47 days to go, you could look at something in April. Like, let's look at where VXX came from. Okay, VXX came from down around 13. Okay, so if you say to yourself like somehow they're gonna contain the coronavirus and everything's gonna kind of, or at least the Fed's gonna come in and stimulate the market and we're gonna get a big rally, then you could reasonably say like we could get back to 16 in like a month or two, right? So, and if you look here, you could buy something like the out in April, and I'm not advocating necessarily doing this, but you could look out in April and buy something like the 17-15 spread, right? And pay 54 cents for a $3 spread, right? Um, so you pay $54 to make 146 if you're right. So that's several multiples on each dollar that you put to work for you. However, it would have to take the like a big crush and the market, bounces big time, but you would make several times your money. I would rather do a trade that's more conservative. But we could, if we went out to April and looked at something a little bit more conservative, something like the 1917 spread, for example. All right, so that's a $2 spread. You would more than double your money if this one came in, right? Pay 74 cents for something that could be worth $2, and it's not unlikely, it's not unreasonable that this could get back to 17 in the next few weeks. I mean, we've seen that in other vol crushes before, but that's a pretty aggressive trade. What I do a lot of times when I'm like thinking of spreads or trades to put on, I like make deals with myself. I say, well, am I willing to pay an extra 10 cents to move it out another week? Am I willing to give up a little bit of potential to make money to give myself another week's chance? And that's kind of how I settled on moving out past April out to May with 75 days to go, and why I picked the 17-20 spread out there, because I felt like 3 months was enough time where we really could roll lower. And I picked some aggressive strikes. I picked the 2017, which is pretty aggressive. But a much more conservative play would be to maybe only go out to April, or maybe even you go closer into the front weeks, but it's a little bit scarier the front weeks. Like April kind of feels like the limit to me, but maybe you go something like the 24-20 spread, put spread in April, 47 days out. You pay $225. The thing, you can almost double your money, and all that has to happen for you to, and this could happen, it's 47 days till expiration, but if we whip back down to 17 in the next week, this trade is going to be money in the bank almost, immediately. So it really just depends on how. Thank you, Market Trader, for your comments, but this is not my only account. And you don't need to retract your message. I appreciate any criticism or anything that negative that you want to say, because we're here to be honest. This is not some sort of scam. I'm not some sort of scammer who is looking to sell you something or do anything. I'm just here to talk honestly about stuff. And I will openly admit that I have lost money last week, as many of us have. And, we're all traders here. I've made millions of dollars in my trading career. I've had, good periods and bad periods. And I'm here to tell you that's what trading is like. Even Warren Buffett has down bad times. And I haven't had a down bad time this year, that's been very bad. I have been entrusted with millions of dollars. Usually, as a professional, I was only using upwards of $2 or $3 million to trade with. But I have established bona fides. I was able to survive as a market maker for many, many years as a floor trader, and that's why I have something to contribute here. So you can look me up. I have written. If you go back in my videos, I've published my P&Ls as a professional. So there you have it. And yes, I only show an account. I never show an account with more than $10,000 in it. There are several reasons for it, which you can imagine yourself, but I never publish online an account that has more than $10,000 on it. I believe a lot of the people that are following me are smaller as well, but I realize that there are many people that are way bigger that follow me, and you can scale a lot of what I'm talking about here to a much bigger spot. And I try to bring guests on that are big traders sometimes as well for you to check out. Yeah, I'm here. The only thing I'm here to sell you is volatility. The only thing I'm here to sell you is volatility. So it looks like we're kind of hanging out where we are now. Nasdaq down 87, E-minis down 32. I wonder if any of you have been kind of noticing. I like to look at during the day, try to figure out who's leading who here. Sometimes the Nasdaq seems to lead the market. Sometimes the E-minis seem to lead things. It seemed Friday like the Dow is kind of lagging behind things a lot. I think part of that is just that the sort of the because of the way the futures and everything settled out on the close the day before, fair value for the Dow was kind of wacky yesterday. I think that's part of it. But you could see the Nasdaq kind of lead things for a while yesterday, and Nasdaq, of course, going to positive on the day before the E-minis. But it kind of changes from day to day who's in the driver's seat as far as that goes. So I think it's important coming into tomorrow that the low, if we can go through tomorrow without making a new low, I think that would be a big deal. And for numbers on the let's see what we've got here. And I think volatility has to come in at some point soon. I don't think we can sustain a 40 VIX for very long. I really don't. But once again, it's going to depend on if we continue to tank, if we escalate another 1,000 points down in the Dow, we'll keep the VIX up here. But anything short of that, I believe the VIX is eventually going to come in. And I know that's not too big of a statement to make, but keep everything in perspective here. I want everybody to just stay safe. You need to use your own risk management, and you need to protect your own money. And it certainly would be bad if my account only had $5,000 in it today, and it had 500,000 last week. Hey, what's up, Eric? Nice to see you. But it's been a difficult time for many people because we've look where we've come from. I mean, these products were down, once again, down around 13. And TVIX is the most extreme example, of course, because TVIX is a double leveraged product, as you know. So, I mean, TVIX closed 104. It got up to something like 125. And, I mean, it's just a devastating move if your position is just shorting TVIX. It's been a difficult time period, I'm sure. And this is, the Volmageddon taught me not to actually just straight up short these products. And so I don't. I use defined risk trades where I know how much I'm risking all the time. And that is kind of why. And here you can see TVIX over the last while. We're in the middle of a spike. I feel like we are going to have a big down move at some point soon. So be ready for that. Don't be surprised if that happens. I believe that even if this market continues to go sideways, if something like we go sideways for 2 days and then we break the low a little bit and then we're sideways for 2 days, even that kind of action the vol is going to come smacking in, because the calculation of realized volatility, as they calculate from the last day, realized volatility in the range, they're going to see a lower realized volatility, and nobody is going to want to hold on to that hot potato of volatility for a while. I can just imagine how terrible it has been for these firms who are in the business of selling little options. A lot of trading firms have been selling these SPX puts for years, and that's been their business model, and they've gotten killed. Yes, I encourage everybody who's watching to check out Brent's content. If you were part of his content, you would know that he's been in cash this weekend, which is a rare situation for him. I'll just speak for him for a second here. So there you go. So we have kind of polarities here. And then if you watch Theo Trade guys have been long premium and short everything. I believe they're still short everything. You've got me on the other end. I'm talking about short stocks and stuff, long volatility. They're not long VIX products, I'm sure, but they're long strategically premium here and there. Then you've got me on the other end who's short VIX products, and then you've got Brent with a third strategy, which is to to protect for the moment until we get some sort of indication as to what is going on here, because it's craziness out there. I'd be interested to also do some sort of a poll to see how many people think that this has something to do with the politics in the U.S. Obviously, it's a combination of many factors, but it's just very curious to me whether how much of this has to do with the primaries and whatnot, and in the U.S., and how much has to do with the virus. Because if you've watched the market at all, you know that like bad news can come out and it can rally, and it just this time it picked to not rally and to sell way off. Twitter announcement. VC analyst Brent sends out a emails to followers that talk about different positions and whatnot. So that's the way I found out that he was in cash. And also, just to plug all of our other social media, you can follow. A lot of us are in the Facebook group, and I know Brent posts there as well. So let me. So I guess I am trying to sell you. I'm trying to sell you a free Facebook group. So bear with me as I put the link into the chat of the free Facebook group. It's not that big of a community, the VIX community, and so everybody kind of like knows each other some little bit. That's the well, by politics I just meant that, like, there are a lot of people, and I'm not saying this myself, but a lot of people are saying, when Bernie Sanders appeared to be the front runner, and I guess maybe he still seems to be the front runner, or Biden's come back a little bit. People were saying, a socialist, at the helm of the world's biggest economy is going to be trouble for the markets and that kind of stuff. So it looks like the very small census in chat is it's zero politics. It's all about the virus here. So, we'll never really know, or we may know when we have some clarity after a while here. But as I said, it's been a tough time for many of us. So if you have lost some money, you're not alone. Don't, you got to just throw those tickets over your shoulder from yesterday and move on, because if you don't, you will not be able to focus as a trader if you can't let go of your P&L from the day before. And I know it can be a very difficult thing to do. And if you've lost money this week, then you want to make that money back as quickly as possible, that kind of thing. But the focus has to be in risk management first of all. Look for opportunities, but risk management first of all. And trying to make it back is can just get you into more trouble, I've found. And I certainly feel that for a lot of people, if you have lost X amount, and I operate this way, if I have big losses at some point, then I do just kind of shut it down, even if just for 3 days. Give some time to get some perspective in your life, because money is a very emotional thing for many people. And as much as we say, I'm not emotional about money, this is trading, I'm a trader, and this is monopoly money or something, it can be emotional. Losses can be emotional. Limit down is next. Well, we'll see. We'll see about your two shots. We'll see about your call. I don't necessarily agree that Black-Scholes is dead as far as a pricing model for options and things. But we will see. And I'm not even aware of what the circuit breakers are in this particular environment. And I need to research that. I will research that, and next time I come on, I will give you a breakdown of where the circuit breakers are in this stuff. I don't know if any of you saw I saw an article saying that the New York Stock Exchange is going to have contingency plans to, I think, basically be all with computers. So if for some reason there's a major outbreak epidemic in New York City, they'll be able to trade from home or something like that. And I think they're going to be testing that soon coming up. Let me just see if I can find the article here. Because, they're thinking like, well, we may have to trade from home if there's some sort of big event that leads us to that we can't come into work. I think that's a little bit extreme. I can't even find the article right now, but I'll post links to it in the comments later. All right, so here we are. We did open down on a Sunday night. It seems to kind of stabilize with the Dow down, futures down about 300, the Nasdaq down about 100, and the E-minis down 34. We're going to see what happens tomorrow morning. People are attaching a lot of importance to tomorrow morning, but of course that importance attached to it will be gone as soon as tomorrow morning's over. So I would say the key right now for you is to protect the money you have and don't take huge risks on it, because we are in a kind of unique environment right now, and a lot of things could happen. We certainly could see more selling. Nobody knows what's going to happen. People who tell you they know what's going to happen are guessing. I know that's obvious, but a lot of times I think for new people, they come on like a chat room and they see all these people saying the same thing, and they think that there's like some secret knowledge that all these people in the chat have that they don't have yet, but that they'll get somehow someday. And I've got news for you folks. Nobody is given the secret knowledge of how to read the future. Even if you're the biggest upstairs trader at Goldman Sachs, you still don't know what's going to happen in the future. And the mere fact of realizing that we don't know what's going to happen, it has a power in itself. And I hope you can gain that power for yourself. And so we don't know exactly what's going to happen. So we look at what's the worst case scenario. And if the worst case scenario is not something that, as far as your positions, is not something that you can live with or that you can sleep with comfortably, then you have two big positions on. So yesterday is water over the dam. It's a new day. Starting tomorrow, and have position sizes that are reasonable for the amount of money that you're willing to risk, and that's going to take some honesty with yourself on your part. I'm optimistic that this market is going to bounce from here. That's my personal viewpoint right now, and I don't know if that's just because I'm trying to justify my position or not, but I'm rooting for this market to bounce here, not only for my position, but just for my friends who are long. So there you have it. I don't want to take too much more of your time. Thank you for watching. I appreciate all of the comments. I definitely appreciate the negative, I guess you could call it negative commentary, if somebody's like questioning the size of my account that I'm showing on the screen here. I appreciate all of that, because I want people to be critical of, you should be critical of what you're watching online. Me, as in anybody else, you should be asking those tough questions of because this is your money. It's a serious thing. Take it seriously. Work real hard, and I wish you the best of success going into next week. Thanks for watching, and we will see you next time on the Short Vol Show Live. I'm hoping to do daily shows as this the crisis continues, and let's make some serious money. There is a huge opportunity here to be successful. So let's do that. I'd love everybody in this chat. How awesome would it be if everybody in this chat made a ton of money next week, and you look back and you said, wow, remember that Friday I was watching some guy on YouTube, and then we just had a great week. That's what I wish for all of you. Not because you watch my channel, but just because I wish success for everybody out there. So best of luck to you, and I'll see you next time on the Short File Show Live. Thanks for watching.